So I don't try to pick the exact bottom. Once we get near, I just start slowly dollar cost averaging in, knowing that my long-term view on Bitcoin is still extremely, extremely bullish. 65K will be a low target for when this thing takes off in the next cycle. Yeah, so I mean, we are holding the 19.5 2017 high. So if we look at the chart here, we can see that if we zoom all the way back to 2017, we briefly pierced it, which is very normal because there's a lot of stops that are put there by investors. There's this kind of mentality that people were buying just above 20,000, so for it to flush below, psychologically, a lot of them will jump out and get scared, and then price usually recovers. So in the very near term, I'm in the camp that we still have a little bit more upside to go. So I could see us bouncing back to 25.5 or so, maybe even 28. But I want to caveat that with saying that this is still a bear market. The charts are still pointing to overall further downside. You're right about a lot of the issues that are occurring, the Celsius news, the Terra Luna collapse. All of those are very much like the dot-com bubble bursting in 2000. And I think that's what crypto is going through right now. And if there's one thing I remember from that period, it was the very, very start of my career, is that it didn't end with just a few blow-ups, right? You have to see more. You have to get more downside there. You have to get to a point where investors are ready to totally throw their hands up in despair. And while a lot of investors are still, they're hurting, the average investor, I think, is in from $50,000, $60,000. They're not fully ready to give up just yet. And I know that sounds horrible, but that's how market bottoms are put in, and that is ultimately what I think is going on here. So I do have a target that remains right around 12,000. So I fine-tuned it a little bit. The 12,000 level gives us a measured move. If you take this move down right here, right? So from this high down, which was a straight shot, then you had this kind of consolidation pattern. And then if you take this high down here, the measured move, meaning this distance to this distance, that's the exact distance from here to where the bottom should be put in. In addition, Bitcoin during its winters, its past bear markets, corrects 80 to 85%. If you correct that in this period, you get 12,000-ish, give or take, as well. So there's a lot of confluence of levels at around 12,000 where my next target is. Markets are very much like that. I mean, we saw that over here where you kind of went up, you start, and this is the key, right? So when we were below 20,000, you saw so much bear market kind of sentiment, and the markets tend to wait and kind of lure people back in. So even in this mid area here, when we were back to these highs of 47, 48,000, I was hearing, oh, we're going right back to all-time highs. This is the big breakout. This is all that stuff. And the markets still need to kind of do that here, in my opinion, in which case they have to move up. You have to start getting that sentiment, that hope back. And the markets are evil like that, and not literally evil, but they like to get people to start to believe again, and then they crush their dreams. And that's just the way markets work. As much as I am a believer that there's a decent chance of going to 12,000, maybe even lower, right? I don't know for sure. There's also a chance it doesn't get there. So what I have done here is I basically selected, and I said to myself, how much money am I willing to invest in Bitcoin in this bear market when it gets down to this area or below? I took that amount, let's just say $1 million, right? And I divide it into 6 categories, 6 even amounts. And when we were at 19,000, I took my first 1/6 and I bought Bitcoin there. And what I'm going to do is every $2,500 to $3,000 down, I'm going to buy another 1/6 position, eventually accumulating a full 6/6 position, right? And so the idea is, I've been around the block enough where I understand that sometimes downside targets don't fully get achieved and sometimes they overshoot. So I don't try to pick the exact bottom. Once we get near, I just start slowly dollar cost averaging in, knowing that my long-term view on Bitcoin is still extremely, extremely bullish. 65K will be a low target for when this thing takes off in the next cycle. This is actually, so this is the crazy thing about it. When you were at 65,000, what did we hear, right? We heard the influencers, the talking heads, everyone was, oh, it's going 100,000 by the end of November 2021, then 250, then 500, and it was ridiculous in that side. And now you're starting to hear the opposite. Everyone's saying, oh, it's a scam, it's going to go to zero. Those are actually contrarian views that as an investor, you need to separate from your own emotion. Meaning the more I hear that, the more I believe that we are getting closer to a bottom. And basically, it just comes back to common sense. So what I would say is by late 2023, so you still, unfortunately, you still have at least another year of this, probably mid to late 2023. I think that's when the next move up can take place. And I also coincide that with my macro view that by that period, inflation will have come down to 4 or 5%, but the economy will be really suffering. And it's likely the Fed will then turn on the spigots again and start stimulating to try to get unemployment, which at that point has probably spiked to 7 to 10%. They'll start to get that down by printing money and stimulating. In general, I like to stick with kind of the top 20 coins because those are the biggest market caps. Those are the safest. Granted, Terra Luna taught us it wasn't necessarily all safe though, so you still have to be diversified. I will tell you this, is that as I accumulate my longer term hold position, like I picked up a little Bitcoin, I am looking to do that to Ethereum as well if it gets down to, let's say, 825, 800. So the key is that for me in my HODL position, which I'm kind of calling it that, where it's a longer term holding position, I'm really just focusing on Ethereum and Bitcoin. Right? So my portfolio is a separate portfolio that I'm putting aside. It's more like a diversification insurance policy. And I'm really sticking with these two, mostly Bitcoin with kind of a smaller percentage in Ethereum. And the reason I'm doing that is because I don't know how the other coins are going to do. How's Solana going to do? How's Ripple going to do? How are these other ones? I honestly don't know. And that makes me unsure about putting kind of my long-term money at risk at this point. So you can see here on Ethereum, we've had an amazing collapse. We basically kissed this 850, 825 level. That was my level to kind of start buying my longer term position, very small at first. We never quite got there, so I just didn't get filled. But now we've rallied into minor resistance. And again, ultimately, I probably think that Ethereum still has more downside to go, even if it does continue up here in the short term. So here's Cardano, right? And I'm going to get rid of some of these other lines because these are just other lines I don't want to confuse people with. But basically, Cardano is borderline maybe breaking out. And what you can see here, as I erase this last one, is you have this beautiful wedge pattern. And look at how Cardano is hitting on this line right here. If Cardano can get through this line, which is around 50 cents, 51 cents, you actually get a near-term breakout. And I think your short-term upside, your near-term upside would be back to about 65, 66 cents. So that's something I'm actually watching on the Cardano chart. Now, on the same respect, if it breaks this line here, you have a move down to about the 39 cent level here. So right now, I like the fact that it's hammering on this level. We just need one little push to get it through, and I think you get another substantial pop all the way back to this high here. Now, granted, if you look at the bigger chart, it's still way, way down there, but as a technical trader, we have to go by short-term levels, right? So if it gets to that next level, we can say, okay, well, if it breaks this now, where's your next target? And we can go from there. But right now, we're focusing on this wedge pattern. Can it break to the upside?